Welcome to the Inside Out Money Podcast.
Can't even recognize this place. Too many pieces of our past mistakes.
Hi, I'm Maggie, and I believe real change starts from the inside out. So let's work together to improve our money and our lives from the inside out. We will explore all things money and our relationship with it. Join me each week with a rotating set of co-hosts, friends, and interviews. Let's jump in.
It's time, we going round and round and round and round.
Hey, Andrew.
Hey, Maggie.
You ready to talk about taxes?
I'm always ready to talk about taxes.
Yeah, who isn't?
It's the end of January. Everyone's getting their tax forms mailed to them. Although mine, what is the form?
W-2?
Was it W-2?
What form do you want? Your paycheck one? Which one?
W-2.
W-2.
Yeah, okay.
Yeah. Are you impressed that I know what a W-2
Yeah, I was just total brain fail right there.
Well, I haven't received a W-2 in 3 years now, so I'm impressed I could even pull that out. So in case you don't know where you are at, hello and welcome to Inside Out Money. This is a personal finance podcast focused on redefining wealth from the inside out. Every week, I speak with a rotating set of co-hosts about a different financial topic, something focused on helping you improve your financial mindset and tactics. Today, we have co-host Andrew, and we're going to talk about all things taxes, from how tax brackets work to the different types of taxes, to how you can save money on your taxes to pay less in taxes, whether you should file your own taxes or hire somebody. We're just going to get into all of it. Think of this as a Q&A episode on taxes.
And the 101 level.
Yeah, 101 level. We'll sort of tease some of the
maybe we'll get into teasing some second level stuff.
But look, dude, I'm surprised how many, and I'm not saying this in a bad way. This is why we're starting with 101. I'm surprised how many people don't fully understand the 101. And look, if it's not your job, you shouldn't. Or I don't mean you shouldn't, but no shame in that, right?
Yeah.
But speaking of it not being our job, should we give a quick disclaimer?
Absolutely. This one needs a big, giant disclaimer.
Yeah, big one.
We are not professional accountants or tax professionals. We are sharing just our opinions in personal situations. Definitely consult a tax professional if you're unsure about any of your individual needs. And also, we're going to talk mostly about U.S. taxes, right? International taxes, totally different ballgame.
Yeah. So this might be interesting if you live outside the U.S. And by the way, big shout out to everybody who listens that lives outside the U.S. Every now and then, 1 out of 90 episodes, we cover a topic that is very U.S. centric. So I apologize in advance, but if you just like hearing Andrew and I talk, then you might still enjoy this. Okay. So taxes are important. We all pay a lot of money in taxes, probably more than we fully realize and appreciate at times. And it's just important to understand a big aspect of where your money is going, how and where you can optimize, what you can optimize, and just how all this works. So like Andrew said, some of this is going to be 101. We apologize if this is too low level for you, but hopefully we'll get to some interesting things throughout the episode that apply to everybody. So let's start with the various types of taxes that exist.
In terms of types of taxes, you've got federal taxes, you got state taxes, you got local taxes. That would be your property taxes, and there are lots of different ones. But the biggest ones that people talk about mostly are their federal, state, and then typically property are the big ones for people. All right, so in terms of federal taxes, these are taxes imposed by the federal government. It pays for all the good stuff that the U.S. provides to us. State taxes, a lot of these are funding your local government's overall state infrastructure.
Education, transportation,
right.
Yeah. Federal taxes are the same for everyone across the country. We'll talk about how tax brackets work in a moment, but we're all following the same federal taxes, no matter where we live in the country. But state taxes can vary significantly depending on where you live. So if you live in a state like Florida that actually has no personal income tax, they make up for it in sales taxes, but they don't pay any state taxes versus if you live in, the state of Georgia where we live, we do pay state taxes. And there's also marginal brackets that are, again, different in every state.
Yeah, the state one, it's just a very dynamic situation where states have all taken a very different approach. You've got states like California and New York, they've got very high income taxes, and Florida and Texas with no income taxes. So that can make a big difference when you're thinking about your finances, and also, are you planning to move to one of those states? Either direction can make a big difference in how you plan your finances.
Yeah. And that's why also professional accountants, tax professionals, et cetera, are licensed in certain states, because the state rules are, the rules are incredibly different across different states. Okay, so I think we should talk about tax brackets. I am always just surprised is not the right word, because that implies like this is something bad if you don't know this, and I don't mean that at all. But I'm always just sort of surprised at how many people don't understand how tax brackets work. And I think it's really important that you do understand how they work. So we're going to just break down how marginal tax brackets work and how income is taxed at different rates. Okay, first, it depends on how you decide to file. So there's actual charts that you can go and Google and look up. We're going to use some examples today, and we're going to use, in our examples, married filing jointly numbers for 2024. But you could be filing single, married filing jointly, or head of household. And the brackets and the rates the marginal tax rates are different based on how you're filing. So in the US, the federal tax income system is progressive, meaning that the more you earn, the higher your tax rate. And it's also marginal. And so when you read the tax rates, like people will see, you could be taxed at a federal level if you're married filing jointly anywhere from like 10 to 37% last year in 2024. And people read that and some people think, oh, well, I make, combined, we make over this amount. So all our money is being taxed at 30%. That is not true.
How the progressive tax bracket system works in the U.S.
So is and I'm quoting, these numbers change a little bit year to year. So I'm quoting 2024 federal tax brackets for married couples filing jointly, just as an example. But you can go look it up if you're filing singly or not singly, but single, or if you are filing as a head of household. Which, by the way, a head of household is usually that you are single. Like when I was divorced, I filed head of household because I was a single adult filing, but I had dependents. And so I get to, you get like the best tax treatment in that category because you're single and you have dependents. Using this example, 2024 married couple filing jointly. The first $23,200 you earn is taxed at 10%. From 23, and I'm gonna kind of estimate these numbers. I'm not gonna read the exact amounts because we'll be here all day. From 23,000 to 94,000 in earnings are taxed at 12%. From 94,000 to 201,000 in earnings are taxed at 22%. So let me give you a real example with that. That means if you and your spouse make a combined income of $150,000 last year, the first $23,200 of that $150,000 you earned is taxed at 10%. So that's $2,320. The next $71,000 you earned out of that next bracket is taxed at 12%, which is another $8,500. The next the final $55,000 you earned is taxed at the highest rate, 22%. If you're married filing jointly, you're doing very well at this point. If you make over $731,000, everything over $731,000 is taxed at 37%, a very high rate, but only the amount over that, right? Everything else is taxed within the specific bracket. So using that example of the $150,000, the total tax someone would pay on that, and again, I'm not taking into account deductions and child tax credits and all those other things, is $23,000. So your total tax liability or your effective federal tax rate in this example is actually 15.4%. Because in the end, you ended up paying about $23,000 in federal taxes on $150,000 in earnings. And so, yes, some of it was paid at 10%, some of it was paid at 12%, and some of it was paid at 22%. But when you average it all out, this example paid about 15% in taxes.
And that's the big misconception that a lot of people have, is they think that, well, if I'm making $150K and I'm falling that tax bracket, then I'm paying 22% on my full $150K, right?
Yeah, exactly. This is also why things like putting money into a 401k, which reduces your taxable income, you should think of it as reducing the amount of your income that's in the 22% range in that example.
Right. And then that's called your marginal tax rate, right? For each additional dollar that you would make, what am I being taxed on? Essentially, what's the highest tax bracket that my income gets to? And then that's your marginal tax rate. And that's what most people are thinking about, right? When they're making tax decisions, you're either increasing your income or you're decreasing your income at a certain level. And so on a 401k, if I'm going to contribute 10K into a 401k, I'm going to take 10K off the top tax bracket and I'm going to save $2,200 in taxes in this example if I reduce my marginal tax rate.
Yeah, and so for some people in some even higher tax brackets, they're paying 30% plus in taxes. So maxing out your 401k is a massive tax savings because in addition to all the other benefits of investing that money and it being pre-tax dollars, you're reducing your taxable income.
Correct. One thing as we talk about these income levels and as you start going up the brackets and you start hitting these really higher income levels, people get fired up about taxes, right? It's a super hot topic, right? If you bring up taxes at a cocktail party, you're going to get some wild reactions. And one thing that that's trying to help me wrap my head around it is if you're paying a lot in taxes, that means your income has gone up, right? And so you try and think about it in that regard where, yes, my tax bill is really high, but then also my income correspondingly is also very high. So that can help soften the blow a little bit if you think about it from that standpoint.
Yeah, that's a great point. Let's shift to actually doing your taxes.
Yes.
Andrew, I feel like I know the answer to this. Like I could guess it, but I don't know if I really know. I'm sure you told me at some point and I can't remember. Do you hire someone to do your taxes or do you do them yourself?
I've done them myself for 25 years.
You've never outsourced.
I've never outsourced it. I've got 25 years of TurboTax returns.
That's cool. That it's all in one system.
Correct.
Because I've been a little all over the place. Like I early on did them myself in the H&R Block software, like out of college. And then eventually I felt like things got complex and I did hire an accountant. And it was affordable for a while. Then it slowly got more expensive. Then I moved to someone else. They actually messed up a bunch of stuff. And I went back to doing it myself in 2021, actually. So there were some years at sort of my highest, I'd say my highest income, but also my highest complexity of my life when I outsourced it. And I've done it all the different ways is my point. I'm a big proponent of doing it yourself, but there are some pros and cons to both, right? There's a little bit of your time or your money trade-off.
Yep.
I would argue 70 to 80% of the time of doing your taxes is gathering all of your documents. And you have to do that regardless of whether you hire someone or do them yourself. You actually kind of got to get it a little more organized in how you pull all that together when you have to hand it over to someone else versus when you're doing them yourself. And you can when you're in TurboTax, you can do a lot of it and then be eventually I'm going to find that one missing form. When you turn it over to an accountant, often they don't want to deal with it till you have everything ready. So my point of view is in the end, you're already doing a lot of the work of having to gather all the stuff yourself and make sure you've got everything submitted to them and answering all these questions. And I also think you can learn a lot doing your own taxes. You really see where things are going. And even in TurboTax, Andrew, do you get excited? I know it's a fake number half the time because you haven't input all your information, but I'm always asking Greg because he does it in TurboTax. I'm always okay, what does it say? Where you're oh, now.
Right.
And he's it doesn't matter. I'm not done. And I was I know. I just want to know what it would be if nothing else was put in. Yeah.
And one nice thing about TurboTax and specifically that I've been consistent, I have a love-hate relationship with TurboTax as a side note. I think the fact that our U.S. taxes are so complex that you have to use a software like TurboTax is a crime. Many other countries, they send you a postcard and it's a super simple because most people's tax situations, mine included, right? I've been a W-2 employee for 24 years. Technically, I've just realized I've been using TurboTax for 24 years because I will be, my first one I filed was in 2000. So this will be the 24th year that I file with TurboTax. And that's my love-hate relationship side of TurboTax, and I wish the filing process in the U.S. was simpler because most people's taxes, they already have all the information, right? They'll tell you if you make a mistake, they'll tell you made a mistake, right?
I mean, it's a little bit of a racket. It's as much as a racket as like financial planners are providing in many ways, in terms of like they make it so complicated. Then you got to hire an accountant.
Right.
Then you got to pay for a tool like TurboTax. There are actually free ways to file your taxes in the U.S. Like there's freetaxusa.com, and we can put a link in the show notes to some of those resources. I will say at the point, because it is annoying, and I agree with you, Andrew, but because it is so complex, I appreciate a tool like TurboTax that really like makes it easy. They ask you questions. Like
one thing the federal government has been going through an initiative to try and make it simpler, and they piloted a simpler system in a few states last year, and I hope they will roll it. Georgia was not included, so I wasn't able to try it out. I hope they roll it out. But yeah, I agree with you that TurboTax, while I wish it didn't need to exist, that put aside, it is a very good tool to be able to file your taxes. And one of the benefits of me having it 24 years of it in TurboTax is the consistency, that I know how the software works. I know how the questions, they don't change it very much, and it imports everything from the previous year. And because my situation is not very complex, I get, it said, well, hey, you got all the information in the documents you filed last year. Are they applicable this year? 95% of the time that's true. And so it makes it filing it a lot easier. And so I think that for people who are W-2 employees without any special circumstances, I think using the free tools or using a tool like TurboTax, and yes, Maggie, I agree with you that compiling all of the information is 80% of the work, and you're going to have to do that regardless of whether you use an accountant or a CPA or not.
Yeah. I would also argue, TurboTax works, and we're saying TurboTax, but like, that's just because that's who we happen. I didn't even know you use TurboTax, Andrew. And so, but there's other pieces of software that are similar and similarly priced, and they're good for more complex situations too. I mean, we have rental properties, we have LLCs, like it handles a lot. It handles like depreciation. I mean, it handles like a lot of things that are more complex. And it does them pretty well. And also like you learn, it explains a lot of things to you, and you sort of see the before and after, and you can drill down into like what changed because of something that you did with a rental property or something like that. And they have chat support. I mean, we've had some issues that were more complex, and like we've sort of like chatted with someone and gotten help on how to deal with a more complex situation. And so they have chat support. They provide different levels of audit protection that are built into the basic TurboTax, and then you can pay for some kind of additional services, which are not that expensive. I don't know if you do, Andrew, but I actually pay for the extra audit protection. It's like under $40 every year. And I like the peace of mind of being like, look, I'll pay a little bit extra to know that if I ever did get audited, you're going to help me. You as in TurboTax are going to like provide me with a licensed accountant to help me with this.
Yeah, I've never done that. I've always taken the approach that if I were to get audited, I would definitely be going and hiring a local CPA to help me with that.
Yeah, that's interesting. I was hoping I wouldn't have to, because I paid that, like they're going to provide me with something.
Yeah, I'm not going to trust the $40 CPA if I'm getting audited by the IRS. I mean, I'll also...
$40? It's like it's like my insurance pool into the group of, I was like the one in a million that I got everybody else's $40.
Maggie, I would certainly recommend that if you got an audit notice from the IRS, that you were going to not use your $40 CPA from TurboTax.
Okay. I'm going to call you then, Andrew.
Definitely do not call me.
Okay. All right, let's knock on wood, hope that I don't get audited, by the way. Okay. Speaking of getting audited, I think we could shift to what most people are often interested in, which is how do I reduce the amount of taxes I'm paying?
Yeah, we're all trying to follow the rules correctly, and there's a big difference between tax evasion and tax avoidance, right? Tax evasion, highly illegal.
Highly illegal. Just want to note that. I know we said we're not professionals at the beginning, but we know for a fact that's illegal. We don't recommend it.
Yeah, just go Google tax evasion, and you're going to see lots of cases of people making really bad life decisions on certain things.
Yeah, and they're in white-collar prison right now.
Correct.
Or some sort of prison.
And then there's tax avoidance / optimization, right? Which is completely legal, right? So the example we talked about earlier, 401k. I'm going to contribute $10K to my 401k. I'm going to reduce my taxable income by $10,000. That's a perfectly legal tax avoidance, tax optimization strategy.
Yeah, the idea of paying less tax as little taxes as legally possible, ultimately it can accelerate some of your financial goals. So I can give a very personal example, which is, Andrew mentioned 401k, HSA is another example. We can talk through some of those. But I took advantage of a deferred compensation program that my company has, and many companies have some version of like a 403b or a DCP, which is deferred compensation. And essentially it is allowing you to defer some of your paycheck now and receive that money at a future date when you might be in a lower tax bracket. And so I at times was in a 30% plus tax bracket, the final chunks of money that I was earning, right? The marginal rate was 30% plus. And I was able to put that money away and say, don't give me that money, and instead put it away in this fund. And I am now receiving it as an early retiree when I don't have a big paycheck. I'm receiving smaller amounts of money that are in all those lower tax brackets. So I'm saving, 10 to 15 to 20% on taxes as a part of that. And it's a legal program. Lots of people have access to programs like that. And that is a, tax optimization / avoidance approach that is completely legal and can, help accelerate many of your financial goals in life.
Yeah, and the DCP is a great option, but it's got to be done under the right circumstances, right? And
Yes.
so that's where your own personal situation will make a difference on whether a DCP is right for you or not.
So on that note, though, Andrew, there are a lot of things that are just about right for everyone, which is, like you said, 401k. So, I mean, some of the biggest things to reduce your taxable income and then also grow your wealth in the process is maxing out your 401k to the annual IRS limit. A lot of people hear maxing out your 401k and they think that means maxing it to what their company matches. So, my company matches 6% and I'm putting in 6%, so I'm maxing it out. But we're talking about to the IRS annual contribution limit, which in 2025 is $23,500. And that would be well beyond what your company is going to match likely. And so we encourage people, if you can afford to, because there's so many tax benefits from it, to max out your 401k to the annual legal IRS limit. And then also if you're eligible for an HSA, the same thing. We did a whole episode on why HSAs are so awesome on episode 23 and how to maximize the benefits of those. They're like triple tax advantage. FSAs, again, DCPs. And so we've got a few past episodes where we dig into those in more detail. And I would highly encourage people to go listen to those if they want to get a little bit more of like a 201 on how to optimize those vehicles. And then the other thing I would say is there's a ton of books and resources and blogs and podcasts that are focused on this.
Yeah, just don't listen to the Instagram influencers, please.
Yeah, I agree. Be careful who you're listening to. But like, I'll give an example. Andrew and I both listened to a recent Chris Hutchins podcast on his All the Hacks podcast. He was actually interviewing Jasmine DeLucci, who is a tax expert, and she seems to be she had great advice to give, and it, was all legal advice and above board and some great ideas. And that's an example of listen to a trusted person that is, Chris in this case is not even a tax expert himself, but he interviewed somebody who is. And you can learn a lot through resources like that.
Yeah, and I think the bottom line is there's not a whole lot you can do when you're a regular W-2 employee. There's what I call the basics, like what we've talked about, of basically your paycheck deductions that you can do. But outside of that, there's not a whole lot you can do in terms of optimization while you're working as a regular W-2 employee.
Well, to reduce your income, Andrew.
Yes.
But I would argue there's a lot that the average person isn't doing in the sense of we specifically targeted and bought a car for our 16-year-old that came with a $4,000 used EV tax credit, which saved a dramatic amount off the purchase of the car, right? And so, I mean, and we chose who purchased the car based on who was qualified for that, right? And so there's a lot you can do between the combination of reducing your income with all the basics like we just talked about, and tax credits and different energy credits. So being very strategic, like you once, when you bought your Tesla, which you since sold, you got the credit, didn't you? Yeah,
I actually took advantage of the biggest one was when I had my Nissan Leaf first, where I got the free Leaf, where I got the $5,000 credit from the state of Georgia. And
you leased it.
I leased it for 2 years and had almost a free lease for 2 years. And then when I bought the Tesla, I actually didn't get the credit on the Tesla because I bought it used. And so they didn't have the used EV credit at the time.
But Greg and I, we both own Teslas. I mean, we got $15,000 in tax credits on Teslas, and we're very strategic about like how and when we bought them in order to get those.
And yeah, there's definitely, I think there are good timing strategies, like what the conversation you and I recently had around your rental property and how this year was going to be the timing of you selling your rental property, and then how it impacted how you thought about things, and you wanted to, hey, I'm going to maximize as much things I can do this year because I know that I can't get the subsidies, right?
Yeah. So yeah, there are a lot of things you can do, but you're right. When you are a W-2 employee, there are a lot fewer things you can do. And I will say, I mean, the pro of that is it's less complicated, right? Like when you become a self-employed person or an entrepreneur, it gets really complicated, right? And that's often
like rental
really
properties are essentially you're running a small business through your rental properties, right? And a lot of people have them set up as LLCs, and you got to have a file of taxes and all that, right? So and there's
a ton of different ways to set up your
correct, and you got expenses then, and then you're deducting those expenses and all those things.
Yeah, and how you handle depreciation, and then what happens when you sell a property. It's complicated, right? Now, I'd argue you could still, like, we still do that with TurboTax, but it gets even more complicated if you are a small business owner, and that's where I think it can be very helpful to consult with a professional. So then there's all the other stuff like charitable contributions, deducting mortgage interest.
Yeah, what's interesting about those two that I think a lot of people miss is that if you're taking the standard deduction, those have no impact. You have to be itemizing in order for those to be deductible.
Yes, that changed in our lifetime though.
I can't remember the year that it changed, but it was a big change. The people in high state tax locations, New York and California, really got upset. Even Georgia, we have a state income tax. So what happened was state and property taxes used to be uncapped, and then it got capped to, I think it's $10,000 is the cap of what you can deduct for those expenses. And so what that effectively did is it brought people who would have been above the standard deduction, would have been itemizing, no longer met that threshold, and then are not itemizing. And so if you're not itemizing, then the deductions for mortgage interest and charitable contributions have no impact because you're just taking the standard deduction.
Yes. You have a much better memory for that stuff than I do.
We used to itemize. And so, and then once that change went through, we stopped itemizing and we took the standard deduction every year.
Yeah, same here. I specifically remember itemizing all my charitable contributions and then just quitting because I was told it no longer mattered.
Correct.
I mean, I still would make them. I just was like no longer worried about keeping receipts and, doing all that jazz. So
speaking of charitable, one thing that I think is super useful is donor advised funds. Liz from Liz That Gets Loaded, our co-host, has talked about it a lot. She's got one set up. I actually plan to do one at some point in the future as well. But if you've got a high income year, and it's a way of concentrating your charitable deductions. So suppose you have a really high income year and you want to start a donor advised fund where you're going to put $50K into that fund. You're going to concentrate all those deductions in a single year, and then over the next 10 years, you're going to pay $5,000 out of that fund. And so in that 1 year, you're able to itemize, get the deduction, and then the fund pays out over the 10 years. And if you'd just done that without the donor advised fund vehicle, then you would not have been able to deduct those contributions.
So to your point, Liz Gets Loaded has a whole episode where she talks all about that. I'll put it in the show notes. But you know what that just made me realize, Andrew? A lot of people ask me about things that I regret from early retiring or what I would have done differently. I would have created a donor advised fund before I left had I thought of it, because it would have been a much more optimized way for me, in the same way that I did deferred compensation, right? Mm-hmm. It would have. I just wasn't as aware of them. Liz hadn't I was trying to think of the right word. I'm doing hand motions, Andrew. She hadn't worked her way into my life at that time. She had a very strategic way. We joke about it, but that she was I want to be friends with you. And then she did. Then she became a co-host. Anyway, she I just didn't know, and I wasn't familiar enough with them at the time, but it's something I wish I had done when I was still a high earner.
Yeah.
Would have been a more optimized way to do stuff.
So one point as we're talking about charitable contributions and we're talking about taxes and timing and the impact on different things, one thing to note is that the tax code is heavily weighted towards earned income. So that's people who are earning an income, they're W-2 employees, they're being taxed, whereas it's not it's more favorable to those who don't have earned income. And the concept of retiring early creates a huge opportunity to dramatically reduce the taxes. And Maggie, you've experienced this firsthand, where you were at a much higher tax bracket when you were working, and then in your non-working years, your taxes drop dramatically, even though you're spending essentially this very similar amounts of money, right? So it's based off of, it has nothing to do with your spending, right? It had to do with everything around how much you're earning, and because you're now living off of things like your DCP and your investments, essentially, you are paying a much lower effective tax rate than when you were working.
Yes, very good example and a very great point. Okay, let's shift to taxes. Are just such an exciting topic, you guys. Our next topic is just super exciting. Like, how long should I keep my tax records for? Isn't that what everybody wants to talk about today?
I've got mine for 24 years.
But where do you keep, you keep them in, do you have like printouts of them?
Yeah, I keep, I've got a file, I've got them all printed in a file cabinet.
Oh, that's impressive. I will say I've gone all digital, dude.
Yeah, I have them all digital, but I also have the paper copies. I will eventually probably get rid of the paper copies, but I love going back and looking at them. I find them fascinating, right? To go back to 2001. I mean, it's somewhat of a reflection of your life and career, right? Like, what were your taxes? What were you earning, right? What companies were you working for? When, things change, right? Your taxes reflect a lot of your life and what's gone on with it. So yeah, I've gone back and looked at a few of them.
Well, I feel you on I do love the Social Security summary of your income by year. It's super cool to look at that progression. And then also once you early retire, and then also the IRS, we'll talk about in a minute, you can get some cool transcripts from them that show a similar thing of what you reported and paid every year. And yeah, it's fun to look. I was about to make fun of you and be like, oh, on Friday nights, you sitting down with Crystal and being
you know what? The returns are less interesting. The W-2s are what I really like.
Yeah.
Right? Because the W-2s have
fair.
your company information on there and your earnings, right? Whereas Social Security just has your earnings, but going back down memory lane and looking at all the different companies I've worked for and all the W-2 statements.
That's fair. Some people go back and look at old photos, but you got all those old tax files. So I don't keep them. I don't keep anything physically. There are general best practices that you should keep your tax records for 3 years from the date that you filed the original return, or 2 years from the date that you paid the tax, whichever is later. That's the standard period. You'll hear a lot of people also use the 7-year rule, that you should keep any important financial documents for 7 years. I follow nobody needs, for 99% of things, you don't need the original of anything. You just need the document itself. And I think about all these fires in LA, and it's so sad, but all that stuff's lost. So even if you do keep things like you do, Andrew, in paper, I know you also have them digitally, but I would highly encourage people to scan them all in. So I have no files left anywhere, paper files. I have everything scanned in and in the clouds somewhere. But I have every year as a result, and I'm not worried about the document retention thing. But unless it's your car title or very few documents that you truly need the original for, some your kids' birth certificates or something, most stuff you just, as long as you have it scanned in and you have a digital copy of it, you're good to go.
Yeah, the tax forms are pretty much the only paper that I hold on to. That's it. And so, and I'll probably let go of them at some point. And one nice thing about TurboTax is I've got a PDF of every single year that it had it, right? So that's easy.
Yeah, it is nice. By the way, I'll put a link in the show notes to my favorite scanner because I'm a big fan of scanners. I think Mike and I did an episode just on like scanning stuff, but we were also talking about Evernote, and I'm not a big fan of Evernote anymore, so sometimes things change. But I love scanning things and then saving them as a PDF, and I scan like mail lasts like 3 days at my house, and if it's important, it gets scanned. Otherwise, it just gets shredded and thrown away. So.
Oh, one thing about the records for property, keeping records of all home improvements you do, very relevant topic for me right now with all the money that we're spending on the home improvement stuff. When you go to sell your house, you need to provide the documentation of all the home improvements you've done to reduce your capital gains.
Yeah, that's a great point. We actually sold a rental property this year, and we've kept, for years because we had to for filing because it was a rental. We happen to have had to keep all that stuff, but on your personal home, people often don't think about that.
Yeah, so I've got a spreadsheet with every single home improvement project that we've done, from the water heater to the decking to the water lines, the pipes, all of that, and then you've got to keep invoices as well from the contractors.
Yeah, that's a great point. And then also just for insurance records. I mean, again, I think I posted some things about this, but like the LA fires, which are so incredibly sad. And I mean, there's natural disasters that happen all over the world that are sad. But ultimately, the idea of, the better documentation you have for the insurance company and for other things, just the more documentation you have, the better is what I meant to say. And you just, again, the thought of keeping a lot of paper stuff is overwhelming. So scan it in and keep it digitally and keep it well, I don't even have it super well organized, but I do know where to find stuff though, and like where to get it if and when I need it. On that point about staying organized and just keeping good records, if you ever get audited also, the most important thing you need is good records. So I've had this discussion actually with like multiple people in the fire community actually who worked for the IRS and or still work for the IRS. And I'll question like, well, can I do certain things with like as a with my rentals? And like Andrew said, there's some gray area, right? Even like when you're a W-2, it's very black and white. When you aren't, there's a lot of things you can do. And I think the IRS would say it's pretty black and white, but I think people get into some gray areas on like how things are dealt with. And the most important thing, if you ever get audited, is that you have good records and that you had an intent and a reason behind what you were doing and why you were doing it. And you didn't just like expense a ton of dinners out, but if you have actual meeting minutes from meetings that you held that involved paying for food or something like that, like that's very different than you just having like, oh, somehow I spent $500 on, food at meetings. And instead I actually had a legitimate meeting once a month. And I'm making this up because this is not a real example for me, but I had a meeting once a month and here are the notes from it. Here's who attended it. And, here's the receipt from it. So just in general, you cannot keep too good of records, right? You can keep bad records and you're really screwed if you get audited and you don't have things well organized. And I've even heard auditors will like generally look at how you kept things and how they're organized and like make some assessments on how deep they're going to go even based on that, right? If you turn over like really well organized, I can't think of a better word than like organized records.
Yeah.
It's a lot different than if you dump a pile of like a mess on an auditor's table.
Yeah, they talked about that in the Chris Hutchins episode a lot around what are some of those key points, and organized record keeping was a key point that his guest made.
Yeah. Yeah, I really recommend you guys go check out that episode. We'll put a link in the show notes. She also talked about something I had never heard of and I went and did right away, but you can go to the IRS and create an account, which many people might already have, and you can actually request copies of transcripts, of your personal IRS transcripts. And it's kind of like doing it where you do it at the Social Security company, which we've talked about, Andrew, where you get like a history of all of your filings over the years. Mm-hmm. And she goes into better detail than I'll do about it, but you even can see some like early signs if you've gotten tagged for an audit. And there's some like interesting things you can do. And she even gives recommendations of like always filing for an extension, because why not if something comes up? Have you ever filed for an extension?
Never.
Yeah, I'm an on-time kind of girl. Like I don't like I'm not knocking it if you got a good reason to file for an extension, but like I'm not filing for an extension unless there's like some crazy extenuating circumstances. I would just rather knock this out, and like, I don't want to delay something and I'm always like, I'm kind of curious and like excited to see, for decades, I owed lots of money. Now I sometimes get a little bit back since being early retired, but and we have to do some like quarterly taxes and stuff now. But anyways, we're on the 101, so I'm not going to get into quarterly taxes.
I went to after listening to that episode, and I went to the IRS site and took a look at the records and downloaded what they had available. They only have a couple of years back available, but I downloaded what they had. It's pretty straightforward.
Yeah, it was interesting. I mean, it wasn't like, oh wow, that was.
I mean, basically, it was a summary of what TurboTax sent them, right?
Yeah, exactly. It was just interesting to see it all in one place.
I've always, one thing I've always been amazed at is I've not had 24 years of perfectly filed taxes. There have been some years where I have made a mistake where I missed one of the forms. I mean, it was a small form, and the IRS notified me and said, "Hey, you missed this one," right? And so luckily it was a small amount. But over the years, I've had, luckily most years are fairly straightforward, and I haven't had a mistake or an issue. But when it has happened, they've been very quick to notify me.
Okay, so I think we can wrap it up now, Andrew. What's your summary of everything we just said?
Overall, taxes are a very complex topic. They're highly personal, so it's hard to speak in generalities because everyone's situation is different and unique. I think there are definitely common themes here where, follow the rules, file your taxes on time, and keep it simple.
Yeah. And it's not so complex that you can't do it yourself with TurboTax, though. For most, again, this is like I would say 80-20 or 90-10 rule. Like 90% of people's aren't that complex.
Yeah. And I think that you can learn a lot along the way by doing them yourself. And when you come across something, and Google is your friend on a lot of this, and there's great documentation. And if you've got the question, most likely someone else had the question out there. And so within TurboTax, they've got a community, they've got a lot of responses and content and things like that. But if you feel like you've got an issue, you get stumped, there's pick up the phone and call someone, right? I would not call anybody in the month of April, right? You never want to call a CPA in the month of April. Get the questions in early before tax season, or file an extension if you're unsure of something. But one thing people forget sometimes, that filing the extension does not delay the obligation. So you still need to file even for the extension and to make an estimate on what you think your taxes will be. And taxes and penalties can be steep, so you definitely this is a spot where you don't want to be conservative. You don't want to try and have it go super tight where I'm going to estimate really low. You actually want to overestimate typically, and it's okay to get a refund.
Yeah, I agree, Andrew. And if you want to hear a fun debate on doing it yourself versus hiring someone to, one of the very early episodes of Friends on Fire from early 2022. It was episode 14 with Mike and I. Old school, early days, vintage Friends on Fire. It's called, the episode name is Tax Time, Yay. And Mike actually is trying to convince me to do my taxes myself. And this is I guess it was 2019, 2020, I don't know. It was for 2019 taxes, but it was I think it was, I don't even know that it was COVID time. It was real early if it was. But it was just I had 3 young kids. I had a very demanding job. I had rental property. We just had a lot going on. And I was yeah, no, I hear you, but I just can't. I got an accountant. They do, I'm not going to do this myself. And then a year or two later, I did end up doing it myself. But it's fun to go back and it's fun for me to go back and listen to the level of confidence I had, doing it ourselves then versus now.
Your train of thinking there, right?
Yeah. But I was 100% yeah, no, cool. I'm glad you do it yourself, but I won't do it myself. And how far I've come is just kind of interesting. And if you just want to feel better about hiring someone, go listen to that episode. Or just do whatever you want, because Andrew and I are just giving you our personal opinions and what we do in a judgment-free zone, and you feel free to do whatever works for you. That is why it's called personal finance. Okay, on that note, don't forget taxes are due April 15th in the U.S. unless you file an extension. And we appreciate you guys listening, especially on an episode on taxes, which is not everyone's favorite topic, except it sounds like it might be one of yours, Andrew.
I love it.
You look so happy.
Crystal always knows when I'm working on the taxes because I'm definitely, the door is shut. I'm in my deep dark hole working on it, and
You're like locked in.
Yeah, there may be some choice words being said when those TurboTax numbers suddenly change when you're typing numbers in.
Hey, what do you like more, like riding your bike or filing taxes?
Yeah, we're gonna go
Say
with riding the bike.
Oh, okay. I was like, yeah, I like both equally. Who do you love more? Okay, that makes sense. Plus, you only get to do the taxes once a year, so it's like, fun little break from riding the bike. If you have enjoyed this episode, we would love it if you want to give us a written review on Apple Podcast. We still have our goal to get to 200 reviews by our...
But we have gotten a bunch more.
We do. We are at... The other day we were at like 156, and we might be... I'm going to open it right now and tell you where we're at.
You could be the 157th by posting a review today.
You could be, but I think someone might have already gotten that number. Oh, no. We're at 156 still. So, look, okay. I know how many people listen to this podcast, and if just everybody who listens would go leave us a review, we would, like, I can't do the math, but, like, we'd have, like, way more than 200. So, my point is, if you listen to this on a semi-regular basis and you appreciate it, we would appreciate a review. It takes like 2 seconds on the Apple Podcast app.
We also encourage you to share this episode with a friend or family member to encourage ongoing discussions about money. You can also subscribe wherever you listen to podcasts. If you have thoughts or questions, we'd love to hear from you, and you can leave us a voicemail or text us at 404-981-3370 or hit us up on Instagram.
Awesome. Thanks, Andrew.
Thanks, Maggie.
Bye.
Bye.
We go